We
gold has
get
gone up
it.
8% and change a year for 24 years. And people say, when's gold going to move? I mean, compared to what? Now, I think it's going to move more dramatically in the years ahead. I think if you pay attention to $100 trillion in off balance sheet obligations, that you come to the conclusion that the only way out of that trap is reducing the spending power of the US dollar. If you do that, like in the 1970s, when you reduce the purchasing power of the medium of exchange by 75%, the other thing that happened in the 1970s is that the price of gold went from an admittedly price controlled $35 to $850.
Gold's enduring role as a store of value continues to shine as economic risks mount. RickRule highlights that the U.S. faces $100 trillion in off-balance sheet obligations, a stark reminder of the nation's fiscal challenges. History offers a compelling parallel. During the 1970s, the U.S. dollar lost 75% of its purchasing power, and gold surged from $35 to $850 an ounce. Gold's price often serves as a leading indicator of inflation, moving ahead of official data. Investment analyst Trevor Yates at Global X underscores the 1970s as a pivotal period when gold prices spiked before a significant inflation surge during America's stagflation crisis. The crisis, marked by high inflation, low economic growth, and soaring unemployment, culminated in a rise in gold prices, reaching $665 by January 1980. The end of the Bretton Woods system in 1971, which decoupled the US dollar from gold, played a significant role in this economic turbulence. As the dollar floated freely, the fixed exchange rate with gold dissolved, unleashing a period of volatility and price discovery. RickRule notes that while history doesn't always repeat, it often rhymes. Gold, a proven haven during crises, could regain popularity as investors confront mounting risks. Though it has been out of the public spotlight since the early 1980s, its resurgence might echo the trends of the 1970s. In 2024, gold has already demonstrated remarkable performance, nearing record highs and rallying nearly 30%. Analysts anticipate the momentum could carry forward, with prices potentially reaching $3,000 an ounce in 2025. However, experts caution that the first half of 2025 may see consolidation, with significant gains materializing later in the year. As gold consolidates around $2,650 an ounce, the projected 13% increase next year signals its historic rally is far from over. For investors, gold's appeal as a hedge against inflation and economic uncertainty remains as relevant as ever. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
You know, when people ask me online, when's gold finally going to move? I say, the year 2000. It was at $253. Now it's at 2,700.
Yeah, I know.
Gold
We
has
get
gone
it.
up 8% and change a year for 24 years. And people say, when's gold going to move? I mean, compared to what? Now, I think it's going to move more dramatically in the years ahead. I think if you pay attention to $100 trillion in off balance sheet obligations, that you come to the conclusion that the only way out of that trap is reducing the spending power of the US dollar. If you do that, like in the 1970s, when you reduce the purchasing power of the medium of exchange by 75%, the other thing that happened in the 1970s is that the price of gold went from an admittedly price controlled $35 to $850. I'm not saying that past is prologue. What I am saying is that people who perceive the problem might consider insuring themselves with the store of value that worked last time. I think that point of view, I think the narrative will be slow for people to adopt because gold hasn't been front and center in the popular imagination since the early part of the decade of the 1980s. I'm old enough to remember the fact that gold wasn't particularly popular at the beginning of the decade of the 1970s. But Daniela, it was really popular on the way out. And I think if you and I are having a discussion, which I hope we will have in 10 years, that we are able to sort of laughingly track the ascent of gold. And the fact that those people who listened to what we had to say and made up their own decision got through the next 10 years with less discomfort than they otherwise would have. We will, if that's true, have done a very good thing, Daniela. I think you probably could. Bitcoin has performed better than gold. People who have no idea of the value of either are attracted to the momentum of one. So it makes absolute sense that he could get traction. I personally, because I'm anti-government, would love to see the U.S. government sell its gold. I'd like to buy some. I think it would be a tragedy if the gold price went up tenfold and the government benefited. I would rather that gold be held by private individuals rather than the government.
So you
Now,
must
I
love the
realize
fact Canada doesn't have any.
I realize that mine is a very, very unpopular point of view,
I would think, yeah, a little bit.
not shared
No,
by
but we
people who
welcome the different points of view. I want to hear more.
not shared by people who believe that their government is of and by them. I don't happen to be one of those. And ultimately, the asset class that the government chooses for its reserve is probably not up to me. But I, in direct answer to your question, I think that Michael Saylor probably will get a lot of traction around that. I think that most of the citizenry doesn't know very much about Bitcoin and doesn't know very much about gold. For that matter, I don't think they know very much about government or the constituents of government reserves. And in that case, they look at an asset class that has performed extremely well relative to an asset class that's only done its job, and they're attracted to the narrative around the asset class that's done well.
The U.S. debt ceiling remains a contentious and largely symbolic political issue. Financial expert RickRule describes it as rarely enforced in practice, viewing it as more of a political tool than a mechanism for genuine fiscal discipline. Rule highlights that debates over the debt ceiling often devolve into battles over which party gets to prioritize its spending agenda, rather than addressing the nation's mounting financial challenges. In the latest standoff, Republicans and Democrats must renegotiate a new spending package within 3 months to avoid another potential government shutdown under former President Trump's administration. House Speaker Mike Johnson described the recent temporary agreement as a good outcome for the country. Contrary to some reports, Johnson claimed to have spoken to Trump, who was reportedly happy about this outcome. However, Trump has been vocal about his disdain for the debt ceiling, calling it a meaningless concept. In a December 20th post on Truth Social, he urged Congress to eliminate or extend the ceiling until 2029. Without this, we should never make a deal. Remember, the pressure is on whoever is president, he emphasized. This rhetoric underscores a broader issue. While intended as a check on government spending, the debt ceiling has often become a political bargaining chip. Rule's perspective aligns with Trump's assertion that the debt ceiling is mainly symbolic, but Rule also sees value in the concept if it were enforced with genuine intent. Let's get back to the interview.
Never observed a debt ceiling. I mean, if we actually were going to have a debt ceiling that they observe, that would be a good thing. If what he's suggesting is that the debt ceiling itself is fraud, because after a bunch of procedural wrangling, they avoid it, then I would agree with him. My suspicion is that a debt ceiling is inconvenient for him. He figures it's his turn to prioritize his spending as opposed to democratic spending. At the risk of offending people around the holiday season, I'm bipartisan. I don't like Republican spending and I don't like Democratic spending. I do feel if what he's saying is that the debt ceiling is artificial and fraudulent, I agree with that. I happen to think it's necessary, but I've observed for my entire adult life them finding procedural ways around the debt ceiling. So there isn't one, despite the fact that it's law. And Daniela, a bigger issue, I think, that Americans pay no attention to is that most of the government debt isn't on balance sheet. The debt ceiling involves $36 trillion owed to bondholders. The Congressional Budget Office says that the net present value of unfunded government liabilities, that's entitlements, exceeds $100 trillion. That $100 trillion, they acknowledge its existence, isn't even discussed in the debt
Wow.
ceiling because it's fraud. It's absolute fraud. Up till now, entitlements have been the third rail of American politics. Touch it and you will die. Vote for it today and you will be out of office before the bill comes due. But Daniela, the bill is coming due. The bill is truly, truly, truly coming through. I honestly do my best every day, as I think you note on social media,
Yeah.
at trying to call people's attention to $100 trillion in off-balance sheet liabilities and the impossibility that fairly naive voters who believe that they will receive these benefits will actually receive them. I actually think that those of us who are numerate are committing fraud by causing people to believe that benefits will be there for them when they will not. Well, I'm an optimist about the American economy. Despite our government and despite our differences as people, we're astonishing in that Our individual creativity, our individual tenacity can fund our collective stupidity. It's just that our collective stupidity is beginning to win. The arithmetic around our collective debts is too high. I think I know the way out of it, Daniela, and it's truly ugly. We'll fiddle around the edges. In Social Security, as an example, we will raise the eligibility year. It'll be a fight, but it'll happen. We will also remove the cap on contributions so that old fat rich guys like me, rather than having their income cap at $160,000, will have it unlimited. At the same time that we means test the benefit, which means that the theft from people like me will become overt as opposed to covert. But none of that's enough. What we will ultimately do is solve the problem, if that's the right phrase, by devaluing the US dollar enough that the net present value of the obligation is removed. That is to say, some old codger who has been promised $4,000 a month by Social Security will continue to get it, but the $4,000 will buy what $600 or $700 used to do.
Gold's performance highlights its enduring significance as a safeguard against inflation and fiscal instability. With historical patterns suggesting a potential for further gains, gold remains a compelling option for those seeking stability amid economic turbulence. Meanwhile, the debt ceiling debate underscores the complexities of balancing fiscal responsibility with political priorities. These intertwined issues emphasize the importance of informed investment strategies and prudent economic planning. How do you think current economic conditions will shape the role of gold and fiscal policies in the coming years? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.